Hello there and welcome to another presentation. In this presentation I want to just go over the working of the software, how you might use the software on a day-to-day use. I'm going to cover most of the areas that we've already covered in all the other individual videos, but I'm going to put it all together. So I'm not really going to be going in depth in each area. I'm just going to show you a bit of a working example so you get a bit of an idea how I use the software myself. Right, so we've got the screen opened here. Naturally, so that you can see, it's February the 18th, today's date, 2010. I'm using the 2010 charts, the US. So I jump into the soft program and I might decide, right, I want to do a quick calculation. Right today, I'm averaging around $35,000 a year. That's been my last couple of years. That's what I've averaged, I've earned. And I go, okay, this year I want to make some extra money. And I've got a possibility that I could make an extra couple $100 a week because I've been investigating some other sources of income, and I figured out that I could probably make an extra couple $100 by doing a small project on the side. Now, I want to see exactly how that's going to affect my tax. So I've entered my 35 there, I've entered it here, entered $200 a week there, I've selected weekly. I'm going to quick calculate. Now naturally, that's going to calculate on that 35,000 and brings it out here. 35,000. There's my after tax at the end of the year, and I've paid $4,000, $4,900 in tax. So now I'm going to click this column, and there we are. It's showing me this here. Now I've paid $7,500 in tax. If I think, oh, I'll go back here and click this and go, right, what is it? Oh, okay, rightio, that's about $2,500. So to make that extra bit of money, it's going to cost me an extra $2,500 in tax to about an extra $10,000 per annum. So it's going to cost me $2,500 to produce that extra $10,000. That is going to be great. Now, even if it was costing me more money, I'd still want it because I want as much money as I can get. But see how I can use that? You can use this and see how you're going, and that's a great way to use the what if calculator. I know a lot of people just jump in. I mean, if you have 4 or 5 members in the family, you can jump in here and use the what if calculator, and it doesn't affect the other part of the program. So that's a great little tool to use. We're going to exit out of that. The whole guts of this program is to enter your income as you earn it, particularly if you're working more than one job, particularly if you're working part-time, casual, full-time jobs, all mixed in together, you're doing a little bit of work of your own. Jump in and put your income in, because let's face it, one employer might take it out at one rate, and another employer might take tax out at a different rate, and end of the year you really don't know if you're going to owe money. And this is what this tool is for. Now, does it mean this tool is going to get it right? No, it's just a tool. It's a tool to aid you in assessing your income tax based upon just the standard brackets. If you know that for some reason you're going to owe more money, allow it. This is a great tool to get you somewhere closer than being in the dark and waiting to the end of tax time. So I jump into Mark, and today's date happens to be the 18th of the 2nd. I'm just going to bring it up, let you see, 18th of the 2nd, 2010. And let's say, for example, I've made some more money today. So I'm going to enter in the 18th of the 2nd, 2010. And to me, it was from a private job. I might put more information there if I want. Of course, you've got this additional comments box here. You can do whatever you want. I mean, you can use this as a really involved little program here of laying out your income, and it might even help you when you do your tax at the end of the year. It's really up to you how you use this software. So I'm going to enter in some private job, and I made an extra $150 for that private job that I just did. And away it goes. So now I'm going to quick calculate, and it comes up and it says that so far this year I've earned this much money. I should have paid this amount in tax on that money, and this is how much I have paid. So I actually know just by looking at it straight away, I'm actually in front, aren't I? I've actually paid more tax than I've needed, and I didn't pay any tax on these two amounts, so that's great. Now, what you've got to remember how tax works is when your employer pays you money, they have a tax chart the government supplies each year, and it's already pre-calculated. It says if this person earning this much money per week, multiply it out for the whole year, is going to place him in a $35,000 tax bracket or a $20,000 tax bracket. It averages the amount of tax out over the whole year, so you don't notice that you're jumping between the 10% bracket to the 20% bracket to the 30% bracket. So naturally, in the beginning of the year, as you're earning income from employers, this is going to look good. It's going to look like you're ahead because this program takes it on tax brackets. It doesn't take it out over the whole year. You can use the forecasting to see a possibility over the whole year, but not this area of the program. Okay? So just want to let you know that whilst this says you're in front, it's in front whilst you're on that tax bracket. Okay? So at the moment, I know I'm not behind. Best thing is not to be behind. Okay? So I'm going to jump up here. I'm going to hit my forecasts, and I'm going to quickly see where it reckons. So at the end of the year, it's telling me that I'm going to be making roughly $22,000 based upon the income I've earned to date. So I look at that and go, great, okay, that's perfect. I look up here straight away, and automatically it's telling me, in actual fact, that I'm in front, because it's a negative. See that? It's got a negative. It's telling me negative 64 means I'm in front, which I already knew that. I already knew I was in front. So that's fabulous. I'm in the 10% bracket. Already it's telling me that I'm going to end up in the 15% bracket. Remember I said the tax department averages it out, and more than likely that 13.29% is going to roughly be what you're paying in tax. What that means is, if I earned $150 here, I would be crazy not to take tax out of these amounts and put it aside. I know it's easy enough. I know we want to just spend the money we get, okay, that we have to pay tax on. But at the end of the day, it's only going to hurt us more because we're going to try to find the money later. And let's face it, it's more difficult to find money later than it is to take small amounts out of figures now. As much as it's painful to do it, as much as we don't want to do it, because a lot of times we're paying for mismanagement of funds by politicians and other people in government. You've seen a bit of an idea. So each week I come in, and that's what I do. Basically, that's all I'm doing every week. I'm coming in, I'm entering my amounts. Naturally, as you get towards the end of the financial year or into the second half of the year, it's got more information in the program to deal with. The more entries it has here to average out for all these figures, for all this forecasting, the first half of the year, a little bit of guesswork involved. I mean, how does a software like this know you earned one job in the year and you're going to end up earning this here? Basically, it's the same way the government looks at it anyway when they do your tax. When you go to an employer and you get taxed, each week your tax fluctuates. That's because each week it's taken on a new week. It's like, well, if we multiply that money you made this week for the whole year, you're going to equal to making this much by the end of the year, so you should have paid this much per week, so we're going to tax you this. That's why your tax goes up and down, folks. It's because they calculate this. It's all worked into the charts that the employers get to use.